As of December 31st, 2025, Warren Buffett has officially stepped down as CEO of the company that he founded, Berkshire Hathaway. No, Warren, don't go. Sorry, I'm going to be okay. Thankfully, he's still going to stay on the board, but there is a new person at the head of the company. But because Berkshire is a public company, we thankfully get to see all the final stock trades that the Oracle of Omaha made. And there were some pretty significant sales. So let's jump into what happened in Q4 of 2025. But first, if you could please follow, this is a brand new channel I've just started called Street Spartz. Street for Wall Street. Spartz is my last name. I'm Derek Spartz, by the way. Give it a follow. More videos to come, and hopefully we can all make money along the way. All right, let's get to the list. First up, the largest holding for Berkshire is Apple, and it has been the largest for a long time, and they've consistently been selling shares, but the value of Apple keeps going up. And that's exactly what happened this quarter. They actually sold about 10 million shares, but the value that they hold, even after that sale, is over $1 billion more than it was at the end of Q3. They now own over $61 billion worth of Apple. So I think this is just profit sharing. And obviously, for them to be their top holding, they still very much believe in the future of Apple Computer. Their third largest holding is Bank of America, and they sold off about 10% of those shares. Again, I think this might just be profit sharing. The end of 2025, we saw some really nice gains, especially in the financial sector. So I think that's all it is here. Nothing to be too concerned about. This next one is interesting. DaVita. You've probably seen their dialysis clinics, and they also do a lot of in-home care for kidneys and things like that. The company actually has an agreement to never own more than 45% of DaVita. So that actually happened, and Berkshire was forced to sell about 400,000 shares just so they could stay under that 45% threshold. So again, nothing to do with the actual company itself. It's just something that they were forced to do. And another 400,000 share sale went to Constellation Brands. Now, they make a ton of alcohols, beers, brands that everyone is familiar with. And this is just a fact that younger adults are drinking a lot less than their older counterparts. And obviously, as the older counterparts start to die off, the younger ones come in, but they're not as interested in alcohol. Now, it could be the fact that you go out to the bar now and it's a $20 drink, or there's all kinds of other ways to alter your mind these days that weren't available before. Either way, whatever it is, younger people are drinking a lot less, and it's starting to show in the stock prices of these brands. So much so that Berkshire sold 100% of Constellation's competitor, Diageo. They are completely out of Diageo stock. They want nothing to do with alcohol, it seems, right now. Although they are keeping a little bit of Constellation, probably just to keep an eye on it. Berkshire also had another full exit from a company from Jefferies Financial Group. Now, they got into a little bit of trouble when they were aligned with an auto parts company that fell into Chapter 11 bankruptcy, and then the SEC jumped in, and they've been scrutinizing them very harshly. And this is the type of company that Buffett doesn't want anything to do with. He's all about no drama companies, and when the SEC gets involved, that's when Berkshire gets out. So they have 100% exited Jefferies Financial Group. Another big exit was about 50% of their shares in Aon. Now, this is one of those companies that does a little bit of everything. It's like risk management, retirement benefits, insurance. If you have a big corporate job, you've probably seen their name on something in one of your forms or your HR, things of that matter. They're a huge conglomerate company. Now, this was kind of bought like 4 or 5 years ago from Berkshire, kind of as a hedge to the downside in case anything happened. But they don't really need that hedge anymore because Berkshire is sitting on a ton of cash. It was speculated that Warren Buffett might make some crazy move and maybe buy like OpenAI or something like that as one final out the door surprise, but that never happened. And they've just been sitting on a ton of cash. They have a record amount right now, $381 billion just in cash at Berkshire Hathaway. And since they have so much cash, they probably figured they didn't need this hedge as much, so they trimmed about half the shares. Next up, they took about a 12% haircut on Pool Corp. Now, they do exactly what you think they do. They sell pool supplies, mostly when it concerns like maintenance, all your chemicals and cleaning supplies and things like that. Now, this might be because more tightening of consumer spending, especially when it comes to new pool installations. there's actually a lot less pools going into new home builds or existing home builds for that matter than there were in previous years. So maybe this is just kind of taking the temperature of the market and backing off a little bit. One that I was kind of shocked about was that Berkshire sold 75% of their Amazon shares. Now, Amazon is nowhere near to their top holding, but they still own a very significant amount. And the fact that they sold 75% of Amazon, but 0% of their Google stock is very telling. I think that they see, and I agree, that Google is just crushing it in this AI thing, and they actually might have a chance to beat OpenAI. So they're probably going to wait and see what happens there. But something about Amazon they are not liking right now. Or maybe it is that Warren Buffett's monthly case of Coca-Cola got sent to the wrong house and he's just bitter and doesn't want to do Amazon Prime anymore. Next up, Berkshire did sell a small percentage of their shares in Liberty Latin America Limited. Now, this is a company that serves Latin American countries with internet, mobile phone, and regular home telephone services. I actually don't know a ton about this company, but I did take a look at the stock chart and it had quite a big run up at the end of the year. So probably just a little bit of profit taking here if I had to guess. And finally, spring training might have just started, but apparently Buffett is not a fan of baseball. That is because Berkshire just sold 48% of their shares in the Atlanta Braves Holding Corporation, which you can probably guess owns Major League Baseball's Atlanta Braves and the incorporated real estate with the team. Now, sports are obviously not going anywhere, but there's something that the company saw that they're not totally feeling this, and they sold about half of their holdings. And those are all the public stock sales in Q4 2025 for Berkshire Hathaway. What do you think of Buffett's moves here? I thought he might do something crazy and just go out with a big bang, but it was just business as usual, which we probably should have expected from the Oracle of Omaha. So what do you think? Does he still got it, or did he lose a little bit of his fastball? Get that baseball reference from earlier. Let me know in the comments below what was his best sale and what was their mistake sale that they're probably going to regret later on down the road. I'll see you on the next video.